Good evening. I am Sudarshan Sukhani and today is April 20th, 2022, Wednesday. Today we are not having a visual video. I will explain my point of view using these charts. Many users are familiar with these two charts. Both the charts represent the end of day Nifty, which means a daily chart for the Nifty. In the lower chart where my mouse pointer is now moving, I have a low lag moving average. And the direction of the moving average tells us the trend. So from here to here, the trend was up, and then from here till now, the trend is down. This is a fast, modern, low lag moving average. In the second chart, the top chart where my mouse pointer is now moving, this is a new modified RSI indicator. I've written it myself. This is a far superior indicator to the traditional momentum indicators that many of us still use. These are the two bands above which the RSI represents strength and overbought. Below this it represents weakness and oversold depending on the circumstances. So the RSI was rising all the time, the modified RSI, telling us that we are in an uptrend, and it turned here. And when it turned, it told us that the market is now going through a downtrend, which is still happening. So our indicators are suggesting that the trend is still down, both of them. But as I have explained earlier, the downtrend is there, and it means that we should see lower levels in the near future. But that doesn't mean something different can happen, may not happen tomorrow. Day to day, things can be a little different from the larger trend. Let's see what tomorrow can bring. Today, the markets opened and closed 177 points higher, and that sounds very impressive. That's a lot of points to gain. But look at the chart. This is today's price action. Today's price action is nothing as compared to the price action yesterday, and it looks like a small price candle as compared to the one that we saw. This doesn't tell us that we had a 178 point rally. We did, because the close was here and the open was here, and the close, was here. So the difference between this and this is 177 or 178 points. But look at the context. The 178 points are nothing compared to what we are seeing. Yesterday's big decline could have easily resulted in a relief rally of 150 plus points, which it did. The point now is, what do we do tomorrow? What we have today is an inside day. The inside day is not abnormal after a very long price candle. This was a very wide price candle. So any price candle today could have been an inside day, and this is not very unusual. But the width of this price candle, today's candle, is also very narrow. So we have a narrow inside day today, which means that a breakout above or below should be a tradable breakout. What are the levels? Let's see. Today's low is 16,978. So we can round it off to 17,000. Any move below 17,000 will tell us that the markets are weakening. The high is 17,186. We can round this off to 17,200. So we have the 17,000 and 17,200 levels, between which the markets are in an intraday trading range. Above and below with these two levels, there is a trend that will develop. Now it is quite possible that markets will remain inside this 200 point range tomorrow. I have no way of saying what they will do, but the big trade will come only when these two boundaries are breached. Otherwise, take intraday trades depending on the market open. If the markets open cheerful, they stay cheerful, look to go long. If the markets open weak or turn weak in the morning, look to go short and keep the trades intraday. Sometimes we just have to accept what the market gives us, and sometimes the market gives us very little. That's okay. Thank you for watching this video. Like it, subscribe it, share it, press the bell icon. We'll meet again tomorrow. Jai Hind.